Hello, everybody. Welcome to Tuesday. The S&P 500 was down 1.1% today, and no changes to our signals for either the stock or the bond market. The big move today, of course, was around the debt ceiling talks. Seems like they're getting a little bit closer, according to the news, but obviously no deal has been reached yet. The thing to keep in mind here that the market is actually doing incredibly well in comparison to the past. So if we go back to 2011 when they had the last really big debt ceiling argument that kind of started this whole thing, when we got this close to the end of the money at the Treasury, the market was down 17%. This market is really just hanging up and holding up all the way through this. We've seen that over and over here that, the market reacts less and less to this. The last time it was down 5%, and it's sort of, the boy who cried wolf. The market is, expecting some type of resolution. So hopefully that does happen. We'll see what transpires there. There is an upward pressure on the market because the earnings were good. Today we heard about the industrial production overall for the country, and it's in an expansionary mode, which is good, although it is bifurcated. It's expansionary in the service sector and actually contracting some in the factory kind of production area. And it lines up very much so with what we've talked about before, where production of goods is starting to fall. There's even some disinflation and deflation happening there, where we're seeing, the price of some of these goods fall. Again, if you think about it, during 2020, for example, services were suffering because nobody could use them, leisure, travel, restaurants, those types of things. And everybody was buying goods. And so they were doing great. And now we're seeing goods suffer because everybody's buying services. And so I think it all works out. But overall, the economy is doing well. The job market is still hanging in there very nicely. And so there could be a really nice movement to the upside if they do get a debt ceiling, agreement here. And so we'll have to see how this plays out. Still something to be aware of and something to be cautious about and something to be ready to get defensive with if they don't end up with a resolution here, because we're at the 23rd of May. It seems like the consensus is someplace between, the June 1st and June 10th or so is when the Treasury might need some more money to come out as far as that goes. So let's see how this plays out. It's kind of a day-by-day thing. Market's down a little bit today, but just keep in mind that so far it's holding up quite well in comparison to previous debt ceiling arguments. So look forward to talking to you tomorrow. Thank you very much.